Hello, greetings to you all. First of all, it's been a while since I took class. I was happy with the government's decision to open up our campuses, but then unfortunately we have to continue. Anyway, so realization account is what we are still discussing. So right now, what I want to um, discuss with you is one sum. When you come back for your classes, we will do more sums. But as of now, we will just do a few sums and I want you to please try your best to understand. Okay. So, how do we do this sum? Please ignore if there is any extra sound. Okay. Okay. So this question is Rita, Geeta, and Ashish were partners in a firm sharing profit or loss in the ratio 3 is to 2 is to 1 on March 31st, 2018. The balance sheet is as follows. Okay, so I've already mentioned to you earlier, when we prepare realization account, the most important part is the additional information. It is the same case even with revaluation account. It is the same case even with this. Okay, so this is the most important part when we prepare the realization account. But I explained to you earlier, I said according to the format, all the current assets, the cash. What are current assets? I already sent to you a notes about current assets. They are assets which can be redeemed within 1 year. So all of them, you can get a money for those assets before 31st of March. Those are called current assets. Now let's look at the asset side and see what are some of the current assets. Is debtors a current asset? Yes, we can get back the money. Debtors are who? People who have to pay us back. We can get the money back before the 31st of March. The same it is with stock. What are stock? Stock are things which are left. You can always sell them off and get money for them. And the same it is for investment. Investment also can be withdrawn and you can get back the money. Plant. Plant is basically a machine. You can also get money back for that. So you can sell off this. Even cash is a current asset, but then can you sell cash? No, we cannot sell cash, and so cash will not come in. Okay, now let's look at the current liabilities. What are the current liabilities? Current liabilities are um, the creditors, and the bills payable. Why not general reserve? General reserve is What is general reserve? Let's talk about it slowly. General reserve is the money which belongs to the owners, and the owners will divide it among themselves. So basically, it will go to the capital account, not to the realization account. Okay. So creditors, can we pay back the creditors within 1 year? Yes, we can. Can we pay back the bills payable within the 31st of March? Yes, we can. You have to think like that. Okay. Current assets and current liabilities are basically those things which can be paid back and can be recovered back before the 31st of March. That means the ending of the year. It could be 31st of December as well. Okay. So now let's go to the sum. Now at least you have an understanding. You have an understanding of what are current assets and what are current liabilities. So now we can move to the additional information and let's try to solve it according to that. So in realization, the first thing that you have to do is you have to transfer those current assets to the realization account. Okay. Okay, I'm sorry there. Let's Okay, this is disturbing. Okay, now there, this is the answer. Okay, so as you can see, I want you to go to the question. Okay, this is the question. Let me zoom it for you. What are the assets? Debtors, stock, investments, and plant, except cash. Cash we cannot sell it. Okay, why do we prepare realization account? We are trying to close down this company, shut down this company. In order to shut down this company, I have to sell all of my assets. So I am going to sell my debtors, my stocks, my investments, and my plants. So before I sell them, I have to give them to someone to sell, maybe a shop or someone. Okay, how do we do that? We will transfer it to the realization account: debtors, stock, investment, and plans. See, the first thing that you have to do is you have to transfer it to the debit side. They were assets, that means in the credit side, in the balance sheet, but now you transfer them to the debit side of the realization account. And similarly, sundry liabilities will be transferred to the credit side. Okay, I think you understand what are sundry assets and sundry liabilities. Basically, they are current assets and current liabilities. Okay, so now what were the original price? We will write exactly according to their original price. This is the original price. Okay, this is original price. Now, if you go back to the question, these are exactly the original price. So now, what did you do here? Let me explain to you first. What did you do here? Nothing new. Nothing new. You just copied this from the question. What did you do here? Same thing. You just copied it from the question. You didn't do anything. But the answer already started. Okay. So you will already get some marks there. So very important. Step marks. Please remember, you will get step marks. So even for those of you who don't understand, please, what did you do there? Nothing. You just copied the question from the, you copied the answer from the question. Okay. So next is the difficulty. Okay, let me cancel this first. Next. Now next is, we have transferred the assets to the debit side and the liabilities to the credit side. Now additional information. Let's look at the additional information. Number one says, Rita was appointed to realize the assets. Rita was to receive 5% commission on the sale rate of assets except cash and was to bear all expenses of realization. What does that mean? That means that Rita was appointed to sell all the assets. Okay, she will get 5% commission on sale of asset and was to bear all the expense. She will take care of all the realization. What is realization? Paying off our debts and selling off the assets. Those are realization. So that will be done by whom? By Rita. Rita is one of the partners. Rita, Gita, and Ashish. Okay, now that is number one. Let's see how does it appear in the answer. How does it appear in the answer? In the answer, if you look at it, you will find it 5%. That's the first thing you will do. So the sundry assets are from the question. You just copied. Now you start the additional information. To Rita's capital account commission, 1,57,400 into 5 by 100. Now, from where did I get 1,57,400? From the assets that she sold. Okay, now this has to be calculated first. Okay, so now how do we do that? Let's start this way. Okay, so basically, what is the idea of putting this? Why are you putting these assets here? Because you want to sell them off. Okay, so if you want to sell them off, you have to have a price. Okay, you cannot simply sell them at the same rate. No, they were 52,300. You cannot sell it for 52,300 again. So let's go to the question. Now assets were realized as follows. Debtors was sold at 30,000. How much was debtors? How much was debtors? Let's look at it. Debtors was 52,000, but now it will be sold and you will get only 30,000 from 52,000. It's a huge loss, but that's what you get when you close down a company. Okay, so the same way, how much was stock? Stock was 36,000, but now it will become only 26,000. How much was planned? 91,000. And how much will it become now? 42,000. Okay, so I hope you understand. So who will sell this? Rita. Rita is going to sell everything. Now another thing that you need to understand is investment were realized at 85% of book value. Book value means the original cost. Simple. Okay, how much is the original cost of plant or investment? It is 69,000. So 69,000, 85%, 85% into 69,000. So you get 58,650. So that means investment will be 58,650. Okay. Then investment was 69, now it will become 58,650. We have solved number 2, we have solved number 3. Now expenses of realization amounted to 4,100. But she already got commission. Okay, Rita already got commission, so she will take care of all the expenses. Firm had to pay 7,200 for outstanding salary not provided for earlier. If any of you would have memorized the format, you will remember this as outstanding salary means what? It is a liability, right? And it was, here it says not provided for earlier. That means it was not recorded. So if you remember the format, unrecorded liabilities are supposed to appear where? In the debit side. Okay, so now let's get back to the sum. Let's go to the answer now and see how it works out. Okay, so if you remember, all the debtors, the stock, the plant, the investment, see, all of them now have been sold and the total comes to 1,57,000. Now from 1,57,000, Rita will get 5%. Who gave us the 5%? The question. Okay, the question. Now see, I want you to do one thing. As you listen to this video, I want you to look at the question. After this video is over, try to solve the question by yourself without looking at the answer. That will really help. Okay, now the same thing goes for creditors. I mean the liability side also. The liabilities also you have to pay back, right? So 65,000 and bills payable 26,000. This stays the same, nothing changed. Okay, so you paid back, there will be no discount, okay, when you pay back others. Okay, so 65,000, here we go, and bills payable 26,000, here we go. Now I'd like you to remember this was from the question. After selling it, it appears here. Are you clear? Please listen carefully. This was from the question, then it appears in the credit side after we sell it. After we sell it, okay? The same thing happens even with liability side. This was taken from the question, but after repaying it back, it goes to the debit side. Okay, I hope you are clear with that. That's what happens with realization account. Interchange, cross multiplication, whatever word you want to use to remember. Okay, then now contingent liability. Contingent liability was given in the additional information. Let's look at it. Okay, it is in number 6. Number 6, as you can see here, 9,800. What does it mean when we say contingent liabilities? I already explained last year, but I'll repeat again. Contingent means nothing but when we have expenses, okay, like which we didn't prepare for, which happens unknowingly, basically. Something like fire, something. Do we expect fire? No, but it comes, right? So all those are contingent liabilities when you have to pay for something. Even paying for a lawyer, see, you will not know that somebody will sue you. So all those are contingent liabilities. So contingent liabilities is 9,800 as shown here. And then Outstanding salary also is liability, so when we pay back, it will appear in the debit side. All the paying backs will appear in the debit side. So after you do all of this, you do balancing. Okay. Now when you do balancing, this does not appear. This does not appear yet. So let's just ignore this. Let's how do we ignore this? Let me just take a pen. Let's just ignore this. This has not happened yet. Okay. This has not happened yet. So okay, where am I? Okay. So that has not happened yet. So this is how it will look after you solve just realization account. So first thing what you did, you brought this from the question. Second thing what you did, you brought all the liabilities to this shop. First you brought all the asset to this shop for what? For selling. Then you brought all the liabilities to this shop for what? For repaying back. Then after that you sold all the assets. These assets you sold them all, and then they came this side, and then all the liabilities also you paid back and they came this side. Apart from that, several other things happened, like commission was given to Rita, and contingent liabilities had to be paid, and outstanding salary had to be paid. These were extra additional information. So after you do this, you will do what? You will do this. What is this called? Balancing. You will find which side is bigger. After you calculate, you find that this debit side is bigger. So when the debit side is bigger, we put the same amount this side, and then after you divide them, and let me just remove this first. After you minus, you will get 1,15,970. Now when you get okay, 1,15,970. Now this is what you get after you deduct. Okay, in case you're not sure about that, let me help you out. Okay, let me just carry this thing here. It doesn't want to go become small, this calculator. Okay, anyway, so I think you know how to minus 3,64 minus 91,000 minus 157. You get 1,15,000. Now how did I get Rita's amount? How did I get Rita's amount? Remember, the share is 3. Okay, 3 is to 2 is to 1. That means 3 by 6. Rita's share is 3 by 6. So into 3 divided by 6. How much do we get? 57,985. Okay, the same thing you have to do for Gita and for Ashish as well. And after you do that, you will get the 3 partners capital for Rita, Gita and Ashish. Okay, so now that we have done with realization account, we will have to move to the next step, which is the partners capital account. What is the partners capital account? All the money that belongs to the partners will be brought in here. First one, we'll go to the question. Okay, let's go back to the question. This is what appears. This is the first capital that was brought by these 3 partners: 80,000, 50,000 and 30,000. This will always be an income balance brought down. See, so therefore you will see that it here, or whenever you prepare a partners capital account, the money from the balance sheet will always appear first here. Balance brought down, it comes down from the balance sheet. So 80,000 for Rita, 50 for Gita, 30 for Ashish. That is the first thing. Then the second thing is, the second thing is we have to find out what else. From the asset side, there's nothing. From the liability side, do we have anything? Yes, we have general reserve. I already explained to you what general reserve is. General reserve means the money which is set aside for future contingents. I just explained to you contingents, right? It's a money which is set aside for contingents, or maybe just to keep in case a business goes through a loss or anything, we need to have reserves. Okay, in fact, a company which has good reserve is considered to be a good company. Remember that. Okay, as you go to higher classes, you'll remember this. Okay, so now creditors is done, bills payable is done, capitals we already did just now, the first one. Now general reserve. What to do with general reserve? General reserve has to be distributed among the partners. How? According to their ratio. Now, what was the ratio? Money is 20,000. It has to be divided 3 divided by 6. So, the general reserve was 20,000. How much is the share of Rita? 3. From where did we get 6? 3 plus 2 plus 1 is 6. So, 20,000 into 3 divided by 6, we get 10,000. So, now here is where we got general reserve for Gita and for Ashish. Now you must be thinking, from where did we get buyer realization commission? Okay, we will study that too. So here we already got, in fact, you can see here, Rita got 7,870. From where? Why did she get? She got a commission. So commission was already calculated, so we won't calculate that. But buyer realization commission is income for Rita. She got 7,870. Now let's go to the debit side. Now the debit side usually is loss. Okay. Now credit side, in partners capital account, one thing you need to understand is all the income appear in the credit side and all the expense appear in the debit side. Okay, things can get quite tricky, because you have to remember so many formats, but it all has one thing in common. They are all income expense, basically. So partners capital account, what you need to remember is this side is usually what you receive, and this side is all the expense. Receive means, what do you mean by receive? Basically what I mean by receive is by balance, is what is already there, right? General reserve, it's already there. Realization also, she received. But let's look at this realization. It's a loss. It's a payment by the company. The company has to pay 57,985, Rita, Gita 38,657, and Ashish 19,000. That much of money has to be paid. Now, to cash account realization expense 4,100. From where did we get this? We got this from here, number 4. It says expenses of realization amounted to 4,100. So 4,100 was spent for the expenditure. Okay, and then we have to cash 35,785, 18,000, 14,000. Where did we get this from? Balancing. Okay, after balancing you will get this figure. So once you finish with partners capital account, you'll have to prepare cash account or bank account. Now in cash account or bank account, they are both the same. Okay, so when you make payment by bank, by check, by Google Pay, by all these, it will be called bank account. But when you make payment with your money, the cash, the paper, the notes, that is called cash account. So now cash account, in cash account, I already explained to you. I don't know if you remember or not, but this is RIP. What does R stand for? All the receipts. And what does I stand for? The line in the middle. What does P stand for? It stands for payment. So you need to remember this when you prepare the cash account. It is simple. Now let's see how. To balance brought down 22,500. From where did we get 22,500? From the question, the initial question, this one, number 1. How much is the cash? 22,500. So it's a balance brought down. So is it a receipt? Well, it's not a direct receipt, but it's money that will come to the cash account. 22,000. Okay, so 22,000. Then what else happened? Let's see what else happened. We also see two realization assets realized. Now, you must be remembering that you sold all your assets and you got 1,57,400. Is that a receipt? Yes, it is a receipt. You received money for selling debtors, for stocks, plans, and investment. After selling everything, you got 1,57,000. So that also is a receipt. Okay. Next. Next, we go to the other side, the credit side, which is the payment side. By realization, liabilities paid off. Liabilities, you paid off your liabilities. How much are the liabilities? 1,08,000. You paid them all back. Okay, so you paid back your liabilities, and so it is a payment, 1,08,000. Rita's capital. So you have to pay for Rita, right? How much did you pay? 35,000. Where did you get 35,000? Here. Then 18,000, then 14,000. This is where you got all these capitals from. And finally, for Rita's capital account, we charge 4,100. Why? For the expenditure. She spent some 4,100 for what? For selling, maybe. She must have traveled, no? By car, by this, by that. For what? For selling all these things. For paying all these things. So, in conclusion, why do we prepare realization account? Because we want to dissolve dissolution. We want to dissolve this company, we want to shut down this company, so we prepare it. How do we prepare it? We put all the assets in the debit side, and then after selling them, they come to the credit side. Then we put all the current liabilities in the credit side, and then we pay them off, and then they come to the debit side. Then after that comes a few other expenditures, like what? Like unrecorded liabilities, outstanding salary here, contingent liabilities, which is given in the additional information. Then we have commission, we have to pay for the commission also in the debit side. And so that's how we prepare realization account, and that's why we prepare realization account. And after we do that, we just transfer the money to the partner's capital account, and then we prepare the cash account or the bank account, which are the same. So that's more or less about realization account. We will do more sums when you come to the campus, but I hope that you are more or less clear. Just get some idea, once you get to the campus, we will stress more on this sum. It's a 6 mark sum. I'm hoping that you will get um, at least 6. Thank you. Have a wonderful day.